One of the questions I get asked all the time right now, and it's a good time to ask the question, being that we're past Labor Day, and all the money managers come back actually to work from the Hamptons and all their luxury homes. Is the market overvalued? And that's a really fair question right now. And there's a lot of empirical evidence that would say that it is. I think it was Eisenhower had said that. I wish I had a one-handed economist, because on the other hand being, well, maybe it's not. So it's a complex question, but I do want to address it. And according to people a lot smarter than me that I follow, one of them being Robert Shiller, he is a very famous Yale professor. He won the Nobel Prize. Brilliant man. Follow his work intently. And if you're familiar with him, you might be familiar with the Case-Shiller Index, which is the top 20 cities in the United States gauging the value of real estate. It comes out every month. But he also has what's called the Shiller CAPE, or CAPE, which basically stands for the cyclically adjusted price earnings ratio. I know this all sounds exciting and everything, but it is to me, and I'm just trying to help you to gain some grasp and insight, and to help you to kind of assess, where the market is and what you should be doing about it with your own personal portfolio and retirement plan, to make sure that you're not overly aggressive. We call it a stress test, or second opinion, that we give to all of our prospective clients here on KFMB. So if you're interested in a second opinion, a stress test of your portfolio, give me a call at 877-406-CALL. That's 877-406-2255. Or you can always reach me on the web at reyesplan.com. That's REYES plan.com. So, the thing that is a little bit concerning, and there's a lot of things that are concerning, of course. We always can be concerned, and I always have to be concerned, because my first job is to protect your money. So let's get into what Mr. Shiller is saying about the market right now. So he uses kind of an averaging method of the PE ratio, of basically the value of the stocks or stock market. And what he's basically saying is that since this has gone back since 1881, he notes that the PE ratio, the way he calculates it based upon his math, his genius math here, is it's only been higher 3 separate times. And unfortunately, those times are not very fun times. 1929, guess what happened then? Stock market crash, Great Depression. 2000, okay, that was the internet bubble. Market lost over 40%. NASDAQ was down 75%. 2007, okay, financial crisis, followed in 08 and 09, market lost over 50%. So, does that mean that the market is going to fall apart tomorrow? Not necessarily, but the fact is that you need to be aware of these things. And the reason you need to be aware of it really is just to assess where you're at. We have 3 principles. Number 1, plan first. Second, protect capital. Protect your capital. Our clients have won the game already. Most of them. They're in their 50s, 60s, 70s. They have money. They're near retirement or in retirement. So we want to have a very solid risk management plan. And it's a great idea to make sure right now, this second, today, that you have a solid written financial retirement plan, and that you have some serious risk management. And what I mean by that is, how do we protect against downside risk? And we're going to talk about that today. But I want to put it in the context of where is the market now. September happens to be a very, very rough month. It's the worst month of the year for the stock market. And what concerns me is that we are at all-time highs in generally the worst month of the year, when generally the market is at a more of a trough. You usually have more selling in the summer going into Labor Day. We've had none, basically. And so you really have a market that's topping at a time when the market tends to correct, September and October. So, you need to be careful. And I'll give you some little statistics here. This, which was very interesting. I was doing some research on this, and that the biggest August for the S&P 500 in 14 years we just had was up 3%. So it's been since 2000, again, that 2000 number, that we've not had a bigger August. August was up over 3%. An unusual time of year to have a large run up in the stock market. So going back to 1929, there's only been 12 times that the S&P 500 rose more than 3% and hit a 52-week high in August. Okay, that sounds good. Okay, that's great. But only once did the S&P have a positive September, and that's a 92% chance that we're going to have a negative September. Now, 1 month I could care less about. My point is that if we take the information from Robert Shiller, okay, that really prices are the highest they've been, except for only 3 other times, which is 2000, 1929, and 2007, that we have some special circumstances relative to September and how August was such a powerful month. I told you August is the worst month, or September is the worst month of the year. You combine that, with that 92% chance of a fall in September, also with midterm elections. And I talk about this with my clients a lot. Midterm election cycles, which we're in, average a 17% loss or drawdown during that period. And that's in November. So, these are things I pay a lot of attention to. So, you should too. And unfortunately, most of you are not aware of all these idiosyncrasies in the market, and I am. And so one thing I would recommend highly, if you take me up on it, is let's do a stress test of your portfolio. Let's do a stress test to make sure that you don't go through a 2000, a 2007, those types of markets again. If you'd like to get a stress test of your portfolio, your retirement plan, a second opinion, give me a call, 877-406, call 877-406-2255, and I can help you assess where you're at relative to retirement. I'll review your taxes, your investments, your estate plan. Really, it's about a $2,500 value that we offer to KFMB listeners. So I would highly recommend you take me up on it. So we're going to take a quick break here, and I'll be back, and we'll talk some more about your retirement, helping to keep you safe. And we'll be back in a few minutes at AM 760 KFMB. This is David Reyes, your retirement architect.
A well-designed, tax-free retirement. And you can have it.
How come I didn't find out about this before?
The Retirement Architect, David Reyes, will continue next.